Today we're issuing our latest report on the Irish residential market, which covers the performance of the housing sector over the first 9 months of the year. 2020 has obviously been a very unusual year for the economy at large, and I suppose it has been unusual for the property market as well in lots of ways. In the beginning of lockdown, we would have been very fearful of what impact this would have on the economy and on the property sector itself. However, the market has proven to be incredibly resilient, both in terms of demand and in terms of prices. So although we look at activity in the first 6 months of the year, which is the only data that's available so far, we can see a contraction of over 20% in the number of units that sold in that period. That does include the 3-month period when we're in full lockdown, so that's not surprising. It's reasonably robust. When you look at the terms of price performance, so in the first 9 months of the year, we've actually seen modest levels of price inflation. Now, if you think of where we've come from in the last couple of years, where prices were either stable or petering down a little bit of price inflation is actually a complete turnaround. So in the first 9 months of the year, average values in Ireland rose by about 0.6%, but outside of Dublin, prices rose by 1.3% in that period. So again, showing you quite strong demand, particularly outside of Dublin. In terms of supply, we came into this pandemic with a supply-side crisis, and actually it's probably worsened as a result of the pandemic. So our initial forecast in January would be that we would have developed about 26,000 houses in all of the country, or units in the country overall, this year. The likelihood now is that figure will be closer to 16,000, so well off original forecasts and very far below market requirements. So that supply-side crisis has actually worsened as a result of the pandemic. In terms of other indicators for the marketplace, the trend lines are very similar to previous years in lots of ways. We continue to see the exodus of investors from the rental sector. So in terms of investors buying private rental accommodation, that represented only 12% of transactions in the first 9 months of the year, where over 30% of vendors were investors leaving the marketplace. Now, as it stands today, the stock of available rental accommodation is a little higher than it would otherwise be, and that is largely as a result of the pandemic, where people have left their rental accommodation to go home and work from home, and that's freed up more stock. So the pressure on rental inflation isn't as great as it would have been before, but that is really a short-term phenomenon, and as people return to their rented accommodation, that stock needs to improve, so that problem persists. So all in all, quite a strong performance for the residential sector overall. Good resilient levels of demand and some uptick in terms of prices, but that ongoing concern about the supply side shortage still persists.